Hey traders, welcome back to another video at the Modern Day Trader with your boy Marcy, and today we're back with another one. So what are we looking at this week? We're looking at another week of performance on the opening range breakout strategy. I took a minute there just to remember what it actually is. But anyway, without further ado, let's just speak about the stats first. What has the stats shown so far? So far, the second sample size hasn't been going the best. We've taken 7 trades thus far, and majority of those trades are either losses or break even with one winner in between. But I think the way things are going at the current moment, we are actually looking like we are good with regards to the numbers overall. Now, we still have not gotten to the 20 trade sample size for the no news tag, essentially, and that is something good. I think that, to me, is like when you actually look at the numbers and you look at the results that you're getting back from the market, it's good. And what I want to mention is that I have noticed something. Now, whether it improves the strategy or not, that is something we will find out when we actually get to an overall 40 trades taken, which means we still need to take a total of 12 trades, actually 11 trades, because one trade is still open, and I will take you guys through that. So just wait until the end and you will see what trade is open, what my risk management is for the trade, what my rules are within that trade, and what I expect from that particular trade. So without further ado, let's jump straight into my review for the week. So guys, what you're looking at right now is simply my equity curve, right? The equity curve this is the overall equity curve and not just the one for the week. So as you can see, it's 28 trades, 60.71% win and break even rate, with a total of 3R. Now, this includes the prior sample size without any adjustments. Well, the adjustments came after the 21 trades, and if I was to just toggle the tag that I landed on my adjustments 2 weeks ago on my review, if you watched that, if you missed that, check it out. It will be right here in the corner. What you can see now is that we've taken 19 trades so far on just no news trades. So what that essentially means is we're taking trades at the Chicago Mercantile Open after price action breaks out of the opening range, the opening 15-minute range. And as you guys can see, with a 19 trade sample size, we actually have a 68.42% win or break even rate with a total of 6R return, which is wonderful. Perfect. So that's what we're working on right now, and that's our whole strategy at the current moment is just trading the opening range with no news. So this week we actually took a total of 3 trades. So 1, 2, let me filter for this week. So let's filter from Sunday, and you can see we took a trade on Monday the 19th, if I'm correct. So we took a trade on Monday the 19th, and that trade ran into Tuesday. And so we didn't take any trades on Tuesday because the Monday the 19th trade actually ran into New York session or Chicago Mercantile session on Tuesday. And then we had a second trade on Wednesday. Thursday, unfortunately, we could not trade due to the fact that there was a red folder news within or after Chicago Mercantile Open. And then we took a trade on Friday. It's not recorded as yet because it is currently open, and I promise I will take you guys through that trade. So let's jump into the first trade. What did we see? Why did we execute? And what was actually happening? So you can see these blue areas in the market delineates market closure. So essentially where the price is moving and the market isn't actually open, right? So that's what it delineates. And then you can see this white section here is when Chicago Mercantile Open, or the session, is actually open for trading. That's when the Wall Street guys are starting to place their puts or calls, they are starting to trade futures, whatever the case may be. That's when the market is actually open and you can expect the most volatility. And that's actually shown here right at the market open. So you can see the first 15 minutes, we are actually looking at the 5-minute chart. So the first 5 minutes of the market open, or the first 15 minutes, sorry, you can see that price action had actually pushed up strong bullish, and we closed this 15-minute candle pretty bullish. All I waited for was for this 15-minute range to open, mark the low, mark the high, and then wait for the break and close either above or below. And on this day we got a break and close above, and you can clearly see that we got this break, and then I placed my entry market execution on the close of that 5-minute candle, stop loss below the low of the open. Now what I am experimenting on is what would the results be on all my winners if I placed my stop loss below the low. I should actually below the low of the 15-minute candle that broke that high, or above the high of the 5-minute candle that broke that low. So what I should actually do is go through all the trades, and I'll do this when I get to a 40 trade sample size, because what that essentially means is my break even would be the lower of one standard deviation of the opening range, the 15-minute opening range, or 1-to-1. And because my stop loss would be a bit tighter, my 1-to-1 range would be a bit closer, thus mean I'd probably get more break evens, but my risk to reward would be bigger, right? Now at the end of the day, I'm not trying to win all the time. I'm trying to remove as much losses and as much cost. I'm working on a more cost-saving model than a profit maximizing model. And the reason for that is I'm trying to have a mentally, I'm trying to have something that doesn't play with my mental too much, where I can see a lot of ups and downs. And to me, if I am to make the adjustment where my stop loss goes below the 5-minute candle that breaks out, what are the chances of me losing? Do I lose more often? Because right now I'm not losing as often. Right now I'm getting quite a bit of break evens, which I'm perfectly fine with because I'm not losing money. The net movement on the account is 0, slight costs, but because it is futures, the net movement on your account would be very, very low, right? So effectively what happened was, you can see the price action on Monday actually pushed quite a bit, and the rule is that I need to go break even at one standard deviation of this range right here. So when price action moved up one standard deviation of the range, I went break even, and that was around, I think in this push here, went break even, and I just left it. Now what you can see is that price action, this trade was still open in the Tuesday's CME open, and all I could do is just plot my range and not trade, because I already have a trade open. And that's one of the rules that helps me to not lose multiple times in a row, or take a break even and then a loss. Right enough, once or twice I caught a W when I was backtesting in the first 20 trades, but more often than not it's a loss, so we don't necessarily do that. And also you exposing your portfolio to more trades and more potential losses when you do that, when you have multiple trades running at the same time. Now I know a lot of people says do it, you take your own way. This is just the way I am testing the strategy. So that was Monday's trade. Let's jump into Wednesday's trade. Now Wednesday's trade was actually quite clean. You can quite clearly see that we had a clean push to the upside, and this is also something that I need to investigate. And I noted this week that what are the chances when we have a strong 15-minute push in one direction, that once it breaks out, and I'm not talking about those when the candles look like this, these small candles, what are the chances when we have big volume, big momentum in the market, and when the 5-minute actually breaks out, that we continue? Because as you can see here and on Monday, if I placed my stop below these 5-minute lows, the 5-minute candle lows, then the chance of me catching the 1 to 2, 1 to 3, 1 to 4 was actually quite high. And price action never came below these 5-minute lows. And that's why there's investigating to do, there's reviews to do at the end of each sample size. And these are the things that you have to do as a trader to become profitable and to move forward in your process and in your journey as a trader. So this was trade number 2. You can see that we got actually quite close to our TP. Unfortunately, we we just shifted and we took me out at break even. Now these stop losses are quite huge, but we are in the testing phase, and at the end of the day, as long as the strategy is performing above break even, I'm perfectly fine with that. I'm perfectly fine with that. So now that I kept you waiting for that, let's actually jump into the trade that is open. This is the trade that is open since Friday, yesterday. The date at recording is Saturday the 24th. So this trade was taken on Friday the 23rd. So you can see that we had this range, and this is what I was talking about that I need to investigate. You could see quite clearly that in the previous 2 trades we had those big 5-minute candles, right? And when you got those big opening range 5-minute candles, you could see clearly that once we broke above or below, in this case we broke above, you could see momentum and an impulse to the upside with little to no correction, pulling back to your entry or even to your stop loss. Whereas here we have a very consolidatory or range bound opening range, and when we broke out to the upside, you can see that we pulled back. If my stop loss was below this 5-minute, I would have gotten taken out pretty much immediately in the next 2 candles, and price action just about missed the 1 standard deviation. So I use the fib just to delineate where 1 standard deviation is. All I do is I pull it from the low to the high, and then I can see that at this -1 position on the fib, that is 1 standard deviation, and we're going to let this thing play out. If it runs into Monday Chicago Mercantile Open, then that means I'm not trading on Monday. And that's it, guys. That's pretty much it. We still 11 trades left because we have an open trade that we still need to record, and it's looking pretty good at the current moment. Overall, 3R with the adjustments, as I mentioned early in the video. With the adjustments, we are sitting at about, I think it's 6R. So overall, we're sitting at a 6R and a 68.42% win and break even rate, which is amazing. I think majority of prop firm traders, want that type of percentage win and break even rate and want that type of return. And so I am chuffed. I'm happy with the results that I'm getting. And as always, guys, I hope you have a profitable week. And if you made it this far in the video, don't forget to hit the like and hit the subscribe button. Comment down below what you think about these market conditions and how you trading. Are you still trading FX? Are you moving into futures? Have you taken a look at your opportunity cost with those 2? So guys, please remember that failure is feedback. Feedback is knowledge, and knowledge is power. And from your boy Marcy at the Modern Day Trader, peace out, man.